So now we have seen how to create adjustments. So we'll apply this to a lengthier problem and we'll see like how to work. So this is a fairly a smaller problem only. Okay. So we'll see like two of these kind of smaller problems. Okay. So we'll start. So given below are the balances extracted from the books of Nagarajan and as on 31st March 2016. So you have like all the uh, particulars here. You have purchases 10,000, wages 600, freight 750, advertisements 500, distribution expense 400, cash 1200, machinery 8,000, bills receivable 2,550, opening stock is 1,000, revenue is 15,100, commission received is 1,900, rent received is 600, bills payable is 2,400, and capital is 5,000. So these are the numbers that we have. So prepare the trading and SOPL. Okay, so we can't say like prepare trading. We'll put it as prepare SOPL. Okay, and SOFP. Okay, for the year ended uh, for the year ended 31st March. So this is our adjustments and okay. So I think we got all the numbers. So I think we could start. So we'll start from the purchases. So purchases has to be going to the cost of sales. Okay. So we have already worked out the cost of sales working notes here. So we'll bring them here. Okay. So purchases, I think we'll put it in this place. So anything that occurs in the trial balance here will only come in one place, and anything that comes in the adjustment will come in two place. So purchase would be 10,000. Next is wages, which is 600. But if you see, there is a adjustment here. So adjustment says is outstanding wages is 200. So we have to add that too. Okay. So add outstanding wages. So outstanding wages comes to 200. Wages was 600. So both put together are 800. Okay. So where does this outstanding wages go? Outstanding wages is we have to pay. So it is a liability. So we have to take this number from here and we have to put it in the current liability side. Okay. So current liability side we have to put. So we'll put it in here. So the amount is 200.
Okay, so we have to show the 202 places outstanding. So once we have shown it uh, in the cost of sales, and the other one we have showed in the liability side. Okay, so next we'll move. Next is freight inwards. Okay, so freight inwards would also come under purchasing only. So we can copy that. So freight inwards is over. Next is advertising. So advertising is a sales expense. Okay, so we can directly show the advertising here as in this one. Okay, we'll just put advertising as 750. Sorry, advertising is 500. Okay, next one is distribution expense. Okay, and we can also put, I think we'll put it as a separate heading. We'll take it as a separate working note. So advertising is 500 and distribution is 400. So we'll take it from there. So next is cash. So we have cash here. So cash amount is 1200. So next one is machinery. So machinery, I think we can, I think there's no other machinery here. So we'll just take machinery and put it in this one. Machinery value is 8000. Bills receivable is 2550. Okay, opening stock is 1000. So we can put opening stock here. And revenue is 15,100. So we'll put that here. Commission received is the 1900. Okay, but we have a adjustment here. So commission received in advance is 400. Okay, so we have to show it as a working note. Okay, so the total commission received is 1900. Okay, so commission received in advance is 400. Okay, so the commission for the year is how much? So normally if you receive any commission before, that should not be considered. Only the commission which is like income that we earn for this year, that should be taken into account. Okay, so this number would go to the SOFP, okay, and this number would go to the SOPL. Okay, so we can take these numbers now. So commission received in advance, we can show it here. It's a liability. And the commission for the year, that amount is a income for the company, so we can put it in the income part of it. So we can put it as commission income. So that's done. Next one is rent received. Okay, so rent received is again an income, so we'll put it here. Okay, so we have bills payable 2400. And we have capital of 5000. Okay, so we have finished commission received. Advertisement paid in advance is 150, so that we have not shown. Okay, so again for that we'll have a we should have a adjustment, so we'll have it here. Okay, so advertisement paid in advance is 150. So advertisement for the current year, okay, advertisement for current year is only 350. Okay, because you should not consider the anything which is paid in advance. Okay, so this 150 is a SOFP, it has to go to the SOFP, and this will go to the SOPL. Okay, so we can solve it. So put together the total sales and distribution expense comes to 750. Okay, that we can show in the sales and distribution expense as 750. And we still have the advertisement for the current, sorry, less advertisement paid in advance, that is an asset, so that has to go to the asset side, so we will put it here. That is 150. Okay, is there any balance adjustments? We just have to find out. Closing stock is the only balancing adjustment. Okay, So closing stock will come once in COS, cost of sales area, and again it will come in the SOFP as a current asset. So that's about it. So we can now close all the numbers here. Okay. So add all the opening stock, purchase, wages, outstanding expense, freight, everything, but just deduct the closing stock. Okay. So our COS is 10,450. So that you have to put it here. So it's 10,450. And do we have any administrative expense? We don't have. So selling cost and sales and distribution cost we have put. Okay. And commission received, I think that also we have put. Okay. So we don't have any other number. And tax is not given in the problem. Okay. So 6,000 will go to the reserve part. Okay. 6,000 will go to the reserve part, and it has already gone there. So anything else that we have to consider? We can show all these current liability in the outside column itself, and if we show the balance sheet tallies. Okay. So that's it. So our concept is like very simple here. Show all the trial balance items, okay, only once in the SOPL and SOFP, and all the adjustments twice, both in SOPL and in SOFP.